Yo 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 yo! Welcome. Today's video is gonna be the weekly market outlook for July 22nd till July 26th. And with that, let's get right into it. So, first things off is I want to start off with the pros and cons from last week. It would just be a really brief review over last week's trades and what I can do better for this upcoming week. So the first pro is I align different time frames, understanding that they all have the same objective. So this is my second aspect of my time frame alignment concept, and this allows for a higher probability trade, because if all the time frames they all have the same objective, that means it's just more confluence. So in this actually occurred on July 15th. So here is the Monday's trade. So it is based on the 15 minute, 30 minute, and 1 hour candle power of 3. So just looking based on this hourly chart here, we can anticipate for us to take out previous day high. So our higher time frame objective is previous day high, and that is the draw. We also closed above this 1 hour CB right here, so that is bullish price action. Here's the 15 minute time frame. So this 15 minute candle right here, I can anticipate for us to take out this high and leave this 15 minute fair value gap to be a breakaway gap. I explained that more in my fair value gap video, but I don't want to go over the same concept all over again. So just based on this 15 minute power of 3, 30 minute, and 1 hour, we can all anticipate for us to take out their highs, right? Their respective highs. So that's me aligning the time frames. And on the 5 minute time frame, there's a 5 minute fair value gap that prices retraces back inside, and we end up taking out that 15 minute high, 1 hour high, and 30 minute high shown here. So we retrace back into it exactly at 11 o'clock. We take out previous day high, and I held my full targets to the -2 standard deviation here, and look at how we reverse right at the -4 standard deviation. And I am just setting up the standard deviation that I did have up here was this swing low to this swing high, basically the retracement leg into the 5 minute fair value gap. Alexa, turn off my better light. All right, so that's the very first pro from this past week, was that I'm aligning different time frames. My second one is that when I was in a trade, I was able to fully hold for my target because I was content with the outcome. Period. I relied on the charts to give me information. So that's from the same trade, July 15th. And what I mean by that is, so just looking at based on this 15 minute or this 5 minute candle here. Oh, you can actually see this. But essentially, I applied the power of 3 concept to every single 5 minute candle. And whenever I applied that, it's like, okay, I'm looking at this candle here. I look at the 5 minute candle. I'm like, okay, am I anticipating for us to take out that 5 minute candle's high or low? And just based on how we closed on these 1 minute candles, you can anticipate how the 5 minute candle would look. So I was just anticipating for us to continue higher, and once we got this larger displacement, that's when I got stopped out of my trade, and I was steadily moving my stop losses to where it shouldn't retrace back into. So that was another pro, is that I was content with my trade, and like I said, I relied on the charts to give me information. And for July 16th, 2024, my third pro this week or previous week was most of the trades I took this week was aligned with the higher time frame. So higher time frame, we still had a draw, like July 15th trade. I still had previous day high as my draw, and we didn't take it out yet, so I was able to use it as a draw of liquidity. July 16th trade, let's take a look at what happened there. So this is July 16th draw right here. So um, this is I think this was here. I think it was this one. So like I said, I'm taking this trade based on how we still had London lows to attack, and even looking on how the 4-hour time frame here. So like I said, time frame alignment. Look at this 4-hour candle closure, this 1-hour candle closure here, this 30-minute candle, and even this 15-minute candle. We all have the same objective, and which is to continue lower. So that, it gives me more confluence for us to continue lower when time frames are aligned with each other. And my last pro this week is that I followed my trade plan and did not chase the trade. I was content with the outcome even if prices did not allow me an entry. My buys was still correct. So what I mean by this is I didn't chase the move even though I had my entry set, right? Prices didn't retrace back into my entry, and once prices took out my objective, I didn't chase the I didn't chase the move. Sometimes that can affect traders where they see their move play out and they're like, oh, can it, they start wishful thinking like, oh, it can go lower, so let me just enter here again. And then, like I said, after their objective is taken, they're essentially just rushing into that trade, really hoping for what is not, or hoping for what is but really isn't. It's all the information that's given to them, it's all coming from wishful think. It's kind of them really it's an illusion almost. So what I mean by that is this is the trade that I was talking about. You can see this on live stream too, on July 17th 2024 live stream, where I actually pointed this exact like play out, but I didn't get an entry. So I was anticipating for us to retrace back inside this 5-minute fair value gap right here. So this 5-minute fair value gap, I was anticipating for us to retrace back into it at 11:30, or not 11:30, I'm sorry, at the 11 o'clock candle. So once we open at 11, I wanted us to retrace back inside the 5-minute fair value gap and take out the 15-minute and 30-minute low. But we retraced back into it at like maybe, so 11:59, 11:58, 11:57, 11:56. So we retraced back inside the 5-minute fair value gap at 11:55. And that, like I said, that doesn't fit my trade plan because I like waiting for candle closures, and I wanted to wait till the next 15-minute, 30-minute, and 1-hour candle closed. But we got the initial entry was a little bit too early, and we ended up taking out the 15-minute, 30-minute, and 1-hour low. So, and I didn't chase this next move too. Like I said, my objective for this trade has been taken, so I'm not going to chase it even though we get another retracement back into it. It doesn't fit my trade plan. And some of the cons, or I guess the con that occurred last week was when I took a trade based on the 15-minute power of 3, I took an entry on the 3-minute fair value gap and set my stop loss according to the 3-minute time frame. I got stopped out due to having a tight stop loss and should have based my trade on the 4-minute time or 4-minute fair value gap. If I had, I wouldn't have gotten stopped out. 7/19, so July 19th trade. And this is the trade here. I remember this pretty clear. So I'm targeting this 15-minute candle's power of 3 here, right? We came into a 15-minute fair value gap. We didn't close above it, and we had this, this really bearish power of 3 here, this 15-minute power of 3. On the lower time frames, on the 4-minute, on the 5-minute, 4-minute, 3-minute, 2-minute, and 1-minute, we had a fair value gap that we could enter off of. I decided to enter off of the 3-minute fair value gap, even though I should have entered on the higher time frame relative to that. So I should have entered on the 4-minute instead of the 3-minute, just because the 4-minute is higher than 3. Higher time frame holds higher power, and I guess that is fractal as well. So I should have based my trade off the 4-minute fair value gap here. So if I did, I would have entered here, had my stop loss maybe in this at the 4-minute candle's opening price here, and that would have prevented a stop out. And even look at, so if you look at my initial entry and stop loss here, prices actually went and stopped me out by like 0.5 of a point. And like I said, I should have, even on the 1 minute, you can see here, I should have had my stop losses at maybe here even. And if I do want to mitigate risk, I should have placed my entry to where, it's still relatively, prices can still retrace back into it, and I'm still comfortable with the amount of size that, I'm risking that trade. But yeah, those are my pros and cons from previous week. I have all the trade recaps for previous week on my YouTube channel if you guys want to get a deeper dive into why I took those trades. And some of the things I can improve this week is I could follow my risk management plan. So I'm going to review which risk management plan I will follow every day on stream. And what I mean by that is I have an aggressive and I have a passive trading like a trading style, I guess. And each day I'll go into that day and I'll determine, okay, well, am I going to be trading aggressively here, or am I going to be trading passively each stream? And when I'm taking a 15-minute power of 3 I guess a trade, I must know why did it create that power of 3. So if we come off like this trade here, we came off of a 15-minute fair value gap, right? So it's clear to me that I can take this 15-minute power of 3 trade because we came into a we're trading into a fair value gap and we have a bearish reaction to it. So that makes sense on why we created that 15-minute power of 3. I can't trade a 15-minute power of 3 just because, and I don't know the reason why. Always ask yourself, why is this power of 3 created? It prevents you from entering, and it prevents you from entering unnecessary trades and really limits the trades. But yeah, so that is the second thing I can improve on next week. The third thing is that I can only trade a power of 3 model without the Y if it is aligned with another time frame. So like, let's say I'm taking a 15-minute power of 3, right? But it didn't trade back inside a 15-minute fair value gap. But if it's if I have time frames that align with that, let's say the 15-minute power of 3 aligns with the 30-minute power of 3, and that means they're aligned with the 1 hour power of 3. I can base my trade just purely based off the power of 3 model, and I don't have to necessarily know why, but the why is still very important. Yeah, and my fourth one is that this is more of a mechanical issue, to be honest. I'm gonna switch my trading platforms from the regular NQ charts to the micros, just so I wouldn't have to like alternate between doing my technical analysis here and then having to switch over to a different chart just so I can get an entry. Because one of the trades that I missed this week actually was this one, where my setup did appear, but I couldn't get into the trade because I was looking on the NQ chart and not the MNQ chart, and by the time that I was able to switch over to the MNQ charts, prices had already moved away from my entry and taken out my objective. So yeah, that I already did all of that, so we're good. And let's finally begin the market weekly market analysis for July 22nd and July 26th. So I always want to start off my analysis on the dollar. And let's take a look at the 8-hour time frame here. So coming into this week, we are rather bullish as of right now, at least. So this is a weekly candle right here, and notice how we have this really bullish closure on this weekly candle on the dollar. I can anticipate for us to rebalance this weekly fair value gap, right? And from there, however we want. I don't know what if we're gonna respect it, or what if we come into the weekly fair value gap, and we don't respect it, and we kind of get a complete rebalance of the fair value gap. That to me, I'm not too I don't really care for, but I am anticipating for us to take out previous week's high on the dollar here, and I'm bullish on the dollar. This is the daily time frame as well, and this last down close candle here could be seen as a order block, but I'm not really a big fan of using order blocks, so I strictly just stick to fair value gaps, just because fair value gaps, they're not subjective. Everybody can see a fair value gap. And let's take a look at the 10 hour as well. So we do have this 10-hour FEG here. So what I want to see is whenever prices retraces back inside this 10-hour FEG coming into Monday, Tuesday, I want to see us respect it and continue higher to rebalance that weekly fair value gap. So that previous week's high is the weekly fair value gap's low, if that makes any sense. So see, that weekly high is this weekly fair value gap's low. So I want to see us rebalance into it. And here too, dang it, I can't actually show you guys, but July 2nd or July 12th's high, or of the daily fair value gap low, is the daily fair value gap low. So let's take a look at the 4-hour time frame, and I'll show you what I mean by that. So there is a daily fair value gap within that weekly fair value gap now, and notice how we have this fair value gap on the daily time frame. It is actually July 2nd's high of day. So I want to see us take out July 12th's high of day. I'm sorry if I said July 2nd. I meant July 12th. So I want to see us take out previous week's high coming into this week, and I also want to see us take out July 12th's high of day. And that's pretty much all I have for the dollar here. This is the last trading week of the month, so like I said, this monthly high here should be the high of the month. I don't see us completely retracing all the way back inside and taking out the high again. So I am anticipating a bearish closure. But like I said, let's just stick to this week and focus there. So after we take out previous week's high, I would stick to or stay with the intraday models, and I would trade intraday models only. I don't really have a higher time frame objective after we take out previous week's high and July 12th's high. It depends on how we trade there. If we get a bearish reaction to it, then it will be shown on the daily time frame. So what I mean by that is, let's say we come into the weekly fair value gap, right, and we get a really bearish daily power of 3. So that means we had a reaction to it, and we can target previous week's low again. But like I said, anything could happen after we take out previous week's high. But because we are closing here soon on the monthly time frame, I would stick to intraday models, like I said, after we take out previous week's high. And that is all I have for the dollar. So because we're seeing higher dollar, what should we be seeing on the indices? If you said lower indices, then you're correct. So my next analysis here will be over NQ, or MNQ to be exact. So going into MNQ this week, looking on the weekly time frame here, this is the weekly candle. So based on this weekly power of 3, just that, I can anticipate for us to take out previous week's high. Sorry, not previous week's high, previous week's low. I know it's a really dumb, way of thinking, but it's just me putting the the background over it. Once I go into the lower time frames, that's when I can start really shaping and picturing the whole story, if that makes sense. So I just have the background right now. I shouldn't have said it like that. I'm sorry. Just because I'm looking at this weekly power of 3 here doesn't mean that taking out the previous week's low is for sure. I get a confirmation of that on the lower time frames. So the weekly objective for me is to take out previous week's low. After that, I would trade intraday models. One thing to note is that we do have a daily fair value gap here, but I don't know if we're going to get a complete retracement back into here or not. If we do, we should respect it. But let's say something like this happens. We take out previous week's low, right? And we retrace back inside that daily fair value gap. I'm not going to instantly short that because, like I said, my weekly objective has already been taken. If we take out the previous week's low first and then retrace back inside that daily fair value gap. But let's say we leave previous week's low intact, right? And we retrace into that daily fair value gap. I would then consider, trading a swing trade. I would consider swing trading here because, like I said, the draw here is previous week's low, and just based on this monthly candle here, I can anticipate for us, we have already created the monthly high. This is, for me, I'm almost like 90% sure that we already created the previous month's high. Now what I'm anticipating is for us to create the previous month's low. So like I said, after we take out previous week's lower, after we take that out, I would trade intraday models, and we are trading into a daily fair value gap here. So what I mean by intraday trading is, let's say we get a closure below this daily fair value gap, right? If we get a closure below this daily fair value gap, I would then treat it as an inversion level, and if we trade back into it, right, we should be seeing lower prices. We should see continuation lower, and after taking out previous week's low, I can see us take out June 12th's low and a immediate rebalance to this monthly high. That is what I would anticipate if we are going to see continuation to the downside. And yeah, that would be more that would be like basically what my NQ analysis is. So let's take a look what I have here. So did I miss anything? So we have a pretty bearish weekly power of 3, and just based on it, I can anticipate for prices to take out previous week's low. After we take out previous week's low, I would elect to trade intraday models. If we close below the daily fair value gap, like I showed in the actual charts, that if we close below the daily fair value gap, we are with close below the daily fair gap. Oh, if we close below the daily fair value gap that we are within right now, so like I said, we are within that daily fair value gap. So if we get a closure below it, that would suggest we are really weak, and that means I would, like I said, consider taking. I would like to see us take out June 12th's low and maybe even an immediate rebalance to this monthly high here. All right, and I do think we have created a monthly candles high already on NQ, like I said before. So I would like to see where we would create the monthly candles low. We can use the TGIF setup, but on the monthly time frame. So what I mean by that is, so let's say we do take out previous week's low, right? And if we do get a retracement, so let's just pull up the previous, let's just put it on here. So let's say we take out previous week's low and we continue just a little bit lower than that, and then we get a retracement back inside the dealing range. How high can we retrace back into? To this 0.2 to this 0.3 of this monthly range. that's just assuming. This is like foresight, because like I said, the monthly candle is closing soon. So TGIF actually, well, we still have 9 trading days. So let's not introduce this yet. We can introduce this next week. But yeah, that would be all I have for NQ. Some of the key points I do have noted here is keep in mind the higher time frame dealing range that we are trading in. Check the 4-hour chart to see. And what I mean by that is this dealing range. So from this candle's low to this candle's high, we are in a bigger time frame dealing range here. We just retraced back inside this 0.5, basically discount of this range. And let's show you why I have this range actually shown here. I believe it is the 1 week, the weekly. So that low that I just pointed out is us displacing away from a weekly fair value gap. So after we displaced away from a fair value gap, from a weekly fair value gap, this is on the weekly time frame. So I just basically took that weekly low to this weekly high here, and I just created a dealing range within that. And like I said, we are in OTE of that range, so, or we aren't actually in it, but we are in discount of that range. So just watch out and watch how we trade from there. I set up some standard deviations as well from this swing high to this swing low. This -1 standard deviation aligns with sell side levels here, this sell side right here. So I use that, and like I said, if we do get continuation to the downside, I can see us take out, I probably said this 3 times now, but I could see us take out June 12th low, maybe a rebalance side inside this monthly high as well. But I do have this -1.5 standard deviation as a target as well. So with that, that is my NQ analysis. Is there anything else? Oh, one key thing is that I am also anticipating for us to create a weekly fair value gap after we close this week. So I am anticipating for us to create a weekly fair value gap with something like this, right? So let's say we had a weekly fair value gap. I want to see us create this because that will set us up for next month's trading. And I don't really anticipate a complete immediate rebalance of previous week's low. So or this week's low, sorry, on this weekly candle right here. So I don't see us retracing all the way back inside there and having an immediate rebalance. So I am anticipating for us this week to create a weekly fair value gap. So with that in mind, I can anticipate for us to not retrace back inside this weekly low. So that could be like a stop loss if you're swing trading. But yeah, that is all I have for NQ now, I think, right? Okay, everything okay. So let's take a look on ES. ES, we do have clear movement here or not movement, but clear price action as well now. We got a closure below a weekly fair value gap. So this weekly fair value gap should have been respected, and we should have continued higher from it. But we completely disrespected it, and we closed below it on the weekly time frame. And we also have displacement on the daily time frame. So displacement as in with the leg move down, we have fair value gaps created. That means there's strength to this move down. So coming into ES this week, I am anticipating for us to take out previous week's low, and for us to maybe complete this sell side, not sell side, I'm sorry, market maker sell model. So there's the original consolidation. Here's the smart money reversal. There you can check there is SMT here at the highs, and yeah, I want to see us take out the original consolidation low, and I say previous month's low, but it's actually this current week's low or current monthly low. So let me just change that to July 2nd's low of day. Let me change that. July 2nd's low. So I do want to see us take out that original consolidation low and take out previous week's low as well. And yeah, let me see else. Is there anything else I'm missing? So same analysis on ES as NQ. So we are anticipating for us to take out previous week's low. After that, I would trade intraday models. So the higher time frame, or the weekly objective at least for me coming into this week, is previous week's low. I am anticipating for us to create a weekly fair value gap this week on ES as well. So let's say we take out previous week's low, right? I want to see us not completely give us a immediate rebalance, because that wouldn't indicate or you know, I want to see us create a weekly fair value gap, because that would set us up for next month's trading. And next month's trading here, if we still have 9 days left in the trading month, but if we are to close on this monthly time frame right now, right, and that means I would anticipate for us to rebalance this monthly candles low. So, or take out this monthly candles low and rebalance the monthly fair value gap. So yeah, that weekly fair value gap would actually support the idea of us continuing lower. What am I anticipating for us to do on Monday? I would like to see us treat this daily fair value gap as a breakaway gap, just based on how we close here on the daily time frame. So on the daily time frame as well, apply the power of three idea. What can we anticipate for us to take out this low first before retracing, just based on how we closed here? So I anticipate something like we open, we create the high, and then we take out previous day low, which is also previous week's low. So we have time frame alignment. And yeah, let's see if we have any supporting ideas of us, or supporting fair value gaps. So we have this 4-hour fair value gap actually. So let's note that out as a 4-hour fair value gap. That could support the idea of us trading lower. So this 4-hour fair value gap should now be treated as resistance to help us continue lower and attack previous day low and previous week's low. Yeah, and like I said, I want to see us complete the market maker sell model by taking out this original consolidations low here. So if we see continuation lower on ES, if we can see more room to go lower on ES, that means on NQ we should see lower as well. That's one thing I failed to mention here. So because ES has room to go lower, like I said, I can anticipate for us to see lower prices as well on NQ, or a continuation at least. And yeah, with that, I think that should be all for the weekly market outlook here. Oh, I forgot to look over news. News is extremely important. Okay, so we don't have any news coming into tomorrow on Monday's trading, so there's absolutely no news on Monday. Tuesday we don't have any news, or red folder news at least. And on Wednesday we have flash manufacturing PMI and flash services PMI at 9:45 a.m. Eastern time. So we do have those red folder news. We do have red folder news on Wednesday, and we also have red folder news on Thursday as well. Advanced GDP and unemployment claims, and we have core PCE price index on Friday, and they both occur at 8:30 a.m. Eastern time. So yeah, just watch out for Monday's trading. Because we have no news, we can't anticipate some sort of consolidation. But anything is possible in these markets today, to be honest, because we had like almost a $600, or not $600, but 600 point move occur during pre-market on a Wednesday and last week, and we didn't even have any news that Wednesday, or red folder news at least. So you know, anything could happen coming into Monday. But yeah, that's really much all I have for this week's market outlook. And I wish you guys you know, safe trading. You know, you guys stay safe, or not safe trading, but good trading. And yeah, be safe. I'll catch you guys later. Peace out. Kaboosh.